The Property Lane.
Welcome to The Property Lane once again, where it is all about real estate. My name is Catherine Nanteza and I'm your host tonight. And with me, I have some well-informed guests coming from different aspects of the real estate. But today, we want to understand. We've had many people say, I am buying a property off-plan, or I have an off-plan investment. What does it mean? Aren't you curious? Well, welcome with me our first guest tonight from Aesthetic Developers. Introduce yourself.
My name is Arnold Ravi. I'm the Marketing and Sales Manager from Aesthetic Developers Uganda, part of the Aesthetic Group based in Mumbai, India. We started in 2018 into the real estate business in Uganda, so far, which is about 4 years now. And we have been into construction and development of condominium apartments. We have about 3 projects so far. And where we are today is the maiden project, which we call Habitat 854, which should be completed by end of this year.
Okay, before you go to my other guest, who you will be knowing soon, you talked of 4 years. Have you had any complete projects so far?
When I say 4 years, much as we came into Uganda in 2018, we did not start immediately. We needed to do quite a lot of research and feasibility studies to actually find out where are the gaps in the real estate market. Yeah? Because of course there are some gaps that haven't been filled by some of our predecessors in this market. So we wanted to know where are the complaints, yeah, so that when we come up with a product, it has fulfilled what other clients have been complaining about or what they feel hasn't been already in this market. So actual construction, we started in August 2021. So basically 18 to 20 was more of a feasibility study and trying to understand the market.
That means all the projects you're having haven't yet taken off, like there is none occupied, yet you have been selling. Is that what they call off the plan? Exactly.
We have been selling off plan, especially this project which is under progress. When we started in 2021, August, when we did the groundbreaking, of course people didn't know exactly what we are going to do. It was off plan, but a few people managed to believe in us and they started booking. So I think it was faith, and of course what also helped is because we are not new, actually new. We are new in Uganda, but we have been in this field for the last 30 years. Because the Aesthetic Group started in 1990 in Mumbai, and I've done several projects in India, in UAE, that is United Arab Emirates. We have done projects in our neighboring countries in Tanzania and in Nairobi. So we had something to refer to. So some of our clients were asking, have you done something? We had something to show. Of course, it was new here, but they had the faith, and we have already had some bookings.
We will be getting back to you. On our set tonight, we also have a banker with us. Please introduce yourself.
Thank you, Catherine. My name is Damari Kairumba. I am the head of home loans for Stanbic Bank. I am very passionate about real estate and I'm happy to be on this show. Thank you.
Thank you. Damali, you've heard from Mr. Alwavi here telling us about off-plan investments. From a banking point of view, what are off-plan investments?
Okay, before I even explain off-plan investments, this is something that Ugandans are beginning to embrace.
Okay.
It is not something that 10 years ago, when I was around, that people embraced. So an off-plan investment, in very simple terms, is you trying to buy or buying a property, in this case, before it's actually built, before you can touch it, before you can inspect it, before you can see what the paint looks like, but you see the image of it. You see the 3D plans. Usually we have what we call 3D plans, and you've got nice pictures on a computer that you can see, on paper that you can look at, and you get to feel what this is going to look like. So you're buying it when it's still on plan, and it is not yet constructed. So that's why we say you buy off plan.
As a banker, bankers are the ones that are most suspicious. They want all evidence before they give you money. Do you finance such projects? If I came to you and I want to buy an apartment in his project, would you give me money?
Yes, yes, we do. As a matter of fact, we, as bankers or financiers of property, of properties or property development, it's very important for us to have what we call off-takers. So either whether you're financing the development itself, you need to have that assurance that there will be people buying. And for the person who is doing the development, they have more comfort, better management of their cash flows, and better planning of their budgets and project management when they actually have assurance that at least maybe 70% of the project has actually been booked and paid for. So in terms of off-plan booking, you actually book with money. You don't, yes, you put money down. So it is not, I can't come to Mr. Lwabi and say, I would like flat number 2, and I don't have money down. So I put a down payment on that money. So now, for us as financiers, that is a good indication of commitment. Commitment is key when you're borrowing. Commitment is key in determining the creditworthiness of the borrower. So when we have more people booking and buying off plan, that means they have equity in the property. That means they're interested in this property because they've even seen it. They have faith enough to buy and put money down. So that would be a credible customer.
If I get you right, you're talking, if Mr. Lwabi says the developer and wants to come to the bank to get money to finance a project like an off-plan project, he must first of all have the drawings ready, the feasibility study, the project management and all that. Yes. But apart from that, he must have gotten people that are committing to buy from his project about 70% of it.
That would make the project more credible. Because remember, as a developer, you're developing to sell.
Okay.
Now, you imagine, and usually the developments take, I think depending on the size of the project, usually most of them take between 18 to 24 months. These, sizable projects, especially the residential ones that we're talking about that are storied condominiums. So they take a considerable period of time during the construction. Now, you imagine what would happen if you have to wait for 2 years to finish and then start to sell. So you've not only lost time, but you will also lose money because you're spending more time and more resources. But you imagine you're finishing your construction and the entire project is sold out. Who wouldn't love something like that? I think every investor would want something like that.
And every banker would be interested in that.
And
but so I'll be coming back to you, Damali. Back to Mr. Lwabi. You talk of, Damali talks of off-takers. Our audience would like to know, who are off-takers?
Off-takers, as Damali explained rightly about the off-plan, Off-plan is exactly you only depend on photos, the 3D, the VRR that we take you through, but there's no physical structure as yet. So off-takers are these people who take that risk and say, let me begin and deposit. For example, in this project 854 and other projects, you must deposit at least 20%.
20%
of the total cost of the unit you are buying. So you have already committed, probably if it's a property of 100 million, you've already committed 20 million shillings towards this property. So if you are to go probably to Damali for financing, then at least Damali will be coming in for the 80%. You have already shown commitment, you have taken off with your 20%.
Now you introduce something else. Earlier on, Damali was talking of financing the developer, right? Where you need at least 70% booking. But Mr. Lwabi brings in the other side of the consumer, that if a buyer is taking on such an apartment and they put down their 20% deposit, you can finance them as well?
Oh yes, absolutely. That is why we are there. Absolutely, yes. So financing would be available. So, and it could even be as deposit for as low as 15%, and the other 85% is provided for by the financier for a long period of time.
And when you talk of a long period of time, if your project is not yet ready and I put down a deposit, if I don't want to go to Damali, is there a possibility of getting that financed? Probably, how long does it take? How many months do you give me to pay?
The duration basically depends on the level of construction. For example, when we had just launched this project, Broken Ground, whoever came on board, we gave them 3 years.
Oh.
After the 20%, because we are actually moving with them. As we progress, we also keep depositing.
Okay.
But now, as we are nearing completion, we can't give you that time.
Now, how
So
much
now,
do you give me?
at most, we will give you about 8 months. So now that's where you have to run to the money. We will give you a longer period of time.
Okay.
So for us, depending on the level of construction, but otherwise it would be between 30 months, which is about 2 years and a half, or to about 2 years to 24 months, between 24 months and 30 at the inception of the project. But if it's nearing completion, of course, the period goes down.
Definitely. What are the requirements for me to, as a consumer of such a project, as someone buying into that project, what are my requirements from the bank?
Okay, so usually we categorize the requirements in.
Okay.
So the most important one, we need to know who you are as a borrower. Who is Kathy? What does she do? How old is she? Is she employed? Where does she live? So we need to understand you. That's what we call know your customer.
Okay.
KYC, we understand who you are. The second most important thing is your income.
Oh, okay.
We need you to evidence that you can afford to pay for the borrowing that you're taking. Whereas you can access a maximum of about 85% or even sometimes up to 100%, how are you going to be able to pay? So you need to demonstrate consistency of income, evidence of that income, and that it will not be such a problem for you, because I mean we are making dreams come true, and we don't want to spoil the dream in the middle of that. The third part is really the property details.
Okay.
So this property that you're buying should have a title. It should have a title. We value the property to ascertain the value of that property. We also, not just the value, but we also have to cover the property we have to do insurance on the property, and for you as the borrower in case of death or permanent disability. But just in case this property also gets issues, let's say you've got a burst water pipe, there's some fire, there's burglary, etc. So we establish the value of that replacement cost as well. So those 3 important things: knowing you as a borrower, your income, to know that you will be able to afford to pay, and the property details, knowing that the property can actually be used as security for the bank.
Wow. That's quite, I hope we all got it. It's so interesting. You brought in the aspect of a title. Back to Mr. Lwabi. She needs a title. Are you giving us a title with my 15% deposit?
No, definitely the requirement of getting a title is when you have completed 100%. When we're actually handing over your keys, that's when we give you your title.
How do I get a mortgage then?
Because, of course, something that will show proof that now I've fully paid and now I'm entitled to my keys is the title, ownership. So what if we give you the title and then you don't complete?
So how do I get money to complete payments? She needs a title, and I'm giving you money. You've not showed me anything. I mean, I'm also trusting that you will complete your project, but I need money to get something that gives me ownership. How do you sort it out between the two of you?
What used to happen initially, cases here, because these are condominium titles.
Yes.
So each apartment has a title. KCCA used to give out these titles before. The moment you would submit your plan and then show you have started, KCCA would definitely say you have 30 condominium units, here are your 30 titles.
Okay.
It has now changed. Why? People used to alternate, to alter the plans.
Okay.
Yeah, a 3-bedroom changes to 2 or 4 in the process. So what KCCA does now, it's until you have completed the project, then they certify and give you the titles.
But are clients getting mortgages to buy off plan at the moment from developers?
Yeah, they do. But what most of them do, they use collateral and collateral security. Yeah. For example, you have land in Chanja. Yeah. You have, it is titled. You use that title, go to the bank. Yeah, and get property and get a loan from the bank.
Let's just pause on that. We are taking a short break, and we will be back. And Damali, please don't forget where you left it. See you in a little bit. Yes, welcome back, dear viewers, to the Property Lane, where it's everything real estate. And yes, Damali, before we broke off, you were telling us, how do I get your money to buy into the project when he's saying he won't give you the title you're asking for?
He will give the title, but it depends. So, before we broke off, I was just explaining. So the first step. So the first is that as somebody who is buying the property, you need to be sure that you get the money. It's advisable that you actually get an approval before you start shopping around or make a down payment to buy off plan. Then you're sure that once you put your 15%, you have the difference. But it also helps you when you're shopping around. You shop for what fits within your budget. So moving on to where we stopped. So once we have done that approval, so there are different things that financials do to manage what would call this quagmire of, you don't have a title, I need the title to be able to release money. So the first one is having a memorandum of understanding. So depending on who the developer is, the credibility of this developer, and the experience and work that they've done. So once that assessment is done and you're comfortable with the developer, so there are different things that can be done. Number one can be that you can actually pay out on completion. So if the developer has got the money to build the entire project to completion at 100%, but they've got a guarantee from the bank that upon completion, will give you the remaining 80% or 85%, whatever the difference is that the customer has paid and what the bank is financing, we'll give you that money and you give us the title. That should suffice. So you get a property guarantee that then you give to the developer, and they're sure that this is my property guarantee is as good as a bank guarantee.
So who is giving me
the bank? The bank issues the property guarantee to the developer.
Developer, are you okay with waiting till the bank gives the money? Because I know that after I make a deposit of 15%, you will want me to be making some monthly payments or what? Okay.
Then he can tell us whether he's comfortable. So, but I'm sure the next option that I'm going to speak to should be able to suffice. So, the other piece is where you agree to release phase disbursements as the construction happens. So the first one will be the 20 or 15% that the customer will put in. Then you'll agree on the stages. So for example, if you finish your superstructure or substructure for the project, we'll then probably release another 30%. Then once you start to do the plastering and put in conduits, electrical fittings, and etc., we'll release another 30%. Then on completion, we release another 40%. So, but these, I just gave that as an example, but it's different for every developer and for every development. So one may say, I'm comfortable, I have my money, I don't need that, maybe I've got construction finance, or I would need you to release this money in phases. So whichever way it works. Again, it still comes back to the conversation. So the bank is a solution provider. Providing solutions for both the developer and the buyer, and the consumer.
Okay.
So it's important that the three are in sync for this to be able to work.
Okay, thank you, thank you. That was so elaborate. And we are still coming back. Yes, would you be willing to wait for all that?
Yeah, just like she has explained, yeah, it's an arrangement where we agree and say either payment will come in per slab as we go on developing. Then we also get commitment from the customer based on the financing. If it's from the bank, of course there will be a pre-planned arrangement, and they will tell us the bank will only be giving me in installments after development. Because we have clients who say, okay, personally, according to my cash flow, I can only pay quarterly, and he commits quarterly payments. Someone says, okay, according to me, I have a monthly salary, and I'm good to go. Every end of month, I'll pay. So it depends how you commit right from the start, is what we go by. Provided on the deed day of completion, when we are handing over the keys and the title, you have completed your 100%.
Why off the plan? Is it that the developer is broke and needs to collect money so that they can put up an investment, or I mean, why off plan for a developer?
Of course, I will talk on behalf of estate developers. Other developers, I don't know other reasons, but why we specifically want off plan is majorly one reason. You tailor your apartment. All the clients we have had the liberty or the discretion to say, fine, aesthetic developers, you have come up with this plan, but for me, I don't want a maid's room. Instead of a maid's room, expand it, I want a very large kitchen. Please remove this corridor, I don't need it. That is the advantage when you book off plan. Yeah, we move with you.
Okay.
Yeah, you have to choose, you can choose the kind of tiles you want. You can choose the kind of handles you want on your doors. And say, much as you are giving me quality handles, but I need this. Or because of my kids, I'm scared they may fall on the staircase. Please, can you add more protectors? Which you wouldn't do if you came and walked in when we have completed. You wouldn't have that liberty to choose.
Could you give us a scenario? If I'm buying in this project where we are in Kulambido, for instance, what would be the difference? If I buy now, what's the price, and what will be the price at completion? Okay. Or if I buy from Nalia, what's the price now and what will it be at completion?
Yeah, for example,
so that one gets to know.
So for example, those who came to us when we were just doing the groundbreaking, who had the trust, who had the faith, and said, no, I booked my 2 BHK, which is 2 bedroom or 3. The 2 bedroom starting price was 350 million Ugandan shillings, which was about $102,000. Yeah. But now, as we speak now, as we are nearing completion, it is 385.
What's the difference?
So that is already 35. Okay. That's appreciated by 35 million shillings.
Okay.
And those who come at completion, that's if they find any, because most of the people have booked, yeah, it will be at 426. So you can see that's a difference of about 70 to 76 million shillings.
Wow, that's
from
quite
the time we
difference.
did groundbreaking to completion time. So you have saved about 76 million shillings. Yeah? And for Nalia currently, we are selling at 299, 2 bedroomed. Yeah? But when we start, it will go to 350. Yeah? So you are currently you are saving 51 million shillings. That's a lot of money. Yeah?
Just in 1 minute, your last word to the viewers.
Okay. I would like to encourage our viewers not to stay back, to take advantage of the financing options that are available in the market, in the industry, in Uganda, for them to acquire property. Get your property now. You'll have value in your property, and don't wait for later.
Yes, Mr. Alwali.
All right, thanks so much, our viewers. What I want to have to tell you, please don't miss out on this chance of aesthetic developers, our condominium apartments. We build for generations, not just for today, but for generations to come. So sustainability is part of our DNA.
From Catherine as your host tonight and the entire crew, ciao.